Today we are talking about selling mineral rights and the typical process that's involved. And be sure to listen to the end because we'll cover 5 red flags to look for when selling your minerals.
Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
All right, thank you for listening to another episode of the Mineral Rights Podcast. Today we have our special guest back again, Justin Williams. Hi, Justin.
Hey, good morning, Matt. Thank you for having me, and looking forward to being here.
Yeah, and today we're going to talk a little bit more about what to know about selling minerals. So we talked about the valuation process in the last episode. So if you haven't listened to that and that's something you're interested in, go to episode 4. We have a link on the mineralrightspodcast.com. Today's episode, you can find the show notes at mineralrightspodcast.com and look for episode 5, what to know about selling minerals. So if you're in the position of deciding, I need to sell a portion or all of my minerals, this is where we'll talk a little bit more about the typical process, some of the time frames that are involved, so to give you a little bit of an idea of what to expect. And listen into the end, we have 6 important red flags to watch out for if you do decide to sell your minerals. So that's what we're going to cover today.
Sounds good. Yeah, and I think a lot of people don't realize with oil and gas properties, just like selling a home, there's a process of due diligence that takes place when you sell your property because the buyer wants to be sure what they're buying you actually own. And that's, step one into getting into it. And Matt, if you want to kind of touch on that and what the due diligence process looks like, I think that's always step one when you're selling your mineral rights, correct?
That's correct. Yeah, no, you hit the nail on the head. So what you'll get is the buyer will do due diligence to make sure that they understand the activity is in the area. So they'll research the property that you own based on the legal description. That they've either found that through doing a title search or doing some due diligence prior to contacting you. Once they've research the property, they'll look for offset activity. And what that is they're looking for any recent permitted wells, any existing wells that are out there, and specifically what's the production look like for those existing wells. And what they'll do from that is say, is this an area that we want to be investing in? And specifically with your property, what's the timing that we think that a well might be drilled there? Because usually what they're looking at is some upside potential. And so they'll do that due diligence process. And so if you get contacted by somebody to buy your minerals, they've done some due diligence beforehand, but then, typically they're not going to do a ton more research and in-depth analysis until you express some level of interest in selling. So assuming that you get contacted, you say, I'm curious about what my minerals might be worth. Make me an offer. They'll then go and do this work. What they may ask you to provide is a copy of a lease, an oil and gas lease if you have one. Also any check stubs if you have existing royalty checks that you're receiving. And the reason that's important is they want to validate the net revenue interest that you own. So they have an assumption based on what they think the amount of net mineral acres you own and based on the spacing of the existing wells and from any publicly available production data from state websites. They can figure all that out for the most part, but they want to just really fine-tune that and make sure that they're going to make you the best offer in most cases. They'll want this information. It's, if you want to know more about how to calculate that net revenue interest, that's something that we talk about in a previous episode. So, go to mineralrightspodcast.com to find out more. So that kind of covers that due diligence process. Does that answer your question, Justin?
Yeah, no, absolutely. I think that answers it well. And, when you're seeking a mineral rights company, I think it's interesting to note, too, that oil companies typically, their business plan is strategic in certain areas. So you really are trying to look for a company who is interested in purchasing in your area and has some activity. Of course, if they're sending you offers, they probably are interested in that area. But when you're seeking somebody, it's not always that they're interested in buying in West Texas, for instance. They may focus in Colorado or other basins.
Yeah, no, that's a good point. And I will say that it's sort of like if you're getting work done in your house, you want to get a couple of bids just to make sure that you're getting the best price and the best value, I guess, for your money. When you go to sell, typically you want to prepare yourself by trying to get a couple of different offers. It doesn't hurt to get multiple offers, and you can even potentially get a little bit of bidding going on between the companies. If you express to a company that has contacted you, say, yeah, I'm interested in getting an offer. By the way, I have another offer on the table. And so it'll help them sharpen their pencils and make a better offer usually. So that's something you can do. And to Justin's point, if you are interested in doing some of this proactively, if you're interested in selling and maybe haven't gotten contacted yet by a mineral buyer, what I would do is look in the local county clerk and recorder's office. You can search if it's got an online search capability. This is something you can do really easily. You can just look for the document type. You can look for a mineral deed and look at what companies have filed recorded mineral deeds recently, in the past 6 months. And that'll a lot of times be names of companies that are active in that area. And so you can collect a few of those names, do some research on your own to do some due diligence. So when we talk about due diligence, I think there's two sides of it. There's the buyer and then there's the seller. So I don't know, Justin, as a mineral owner, and you've gotten some offers to buy, what kind of due diligence have you done on companies?
Absolutely. And I think a lot of it goes back to just looking into the reviews, looking into what other mineral rights forums are saying about those companies and experiences they've had. And sometimes it just comes down to the experience when working with the company. Do you get a bad feeling when you talk to them? Do they seem like great people to work with? And, I think a process from company to company of selling your mineral rights can be greatly different. And you'll find that some you enjoy the process, some it seems like a huge headache, and that can be a huge determination in that. And I think also, Matt, that ties perfectly into evaluation, which we talked about in our last episode, in that for the buyer going into it, you want to have some idea on what it's worth. And the seller is going to make you an offer, but how do you know that per acre offer is really what you're looking for, it's competitive, and it's what you deserve? And I think that's important for the buyer, like you're saying with due diligence, have an idea of what you want going in and what it's worth. Because sometimes they can take advantage of you in that way.
Yeah. So as a seller, you want to do your own due diligence, and I think the valuation process that Justin mentions. We have episode 4 all about the details around the different ways that mineral rights are valued and the details associated with that. So listen to episode 4 if you haven't listened to that already, and that'll provide more detail around the specific steps. So rather than cover that in detail, listen to episode 4. We'll talk about, assuming you have an offer now. So let's say that you've either been contacted and received an offer from a buyer, or you've gone out on your own and done some research. And like Justin said, through word of mouth, maybe you've heard people have had good experiences with a particular company. So you might consider contacting that company. They have usually most reputable buyers will have a pretty comprehensive website that you can go and review information about their process, like Justin mentioned, about their history, their background, about who the owners are and, what their values are, as people and as, owners of the company. And if those values align with your values, then that can help inform, who you want to work with. So so going back to the next step, say you get an offer. This is where you really want to think carefully about the decision. So this is kind of the decision point. You get an offer, either you decide to move forward and sell, and there's some more steps that you follow. And kind of throughout all of this, generally speaking, you have exit points where you can say, well, if it doesn't feel right, you can always back out. After you sign some paperwork, there may be issues with doing that, but just saying at this point you haven't signed anything. Let's say you've got an offer that typically should not have any obligation with it associated with you receiving the offer. You should be able to get a written offer from a company without having to sign anything to say, yeah, I'm going to sell them to you beforehand, before you need to show me the number. This is where you have to really review it, potentially get some advisors to to help you understand what the wording in the contract means and any your obligations. So when you get an agreement to sell, it'll usually outline specific responsibilities for both the buyer and the seller. And so it'll have things like what the effective date of the transaction is, what the agreed to price, on a net mineral acre basis, and the total price based on, the fact that you own X number of net mineral acres based on this legal description. And then it'll have information about the due diligence and title search and give them some time to complete that. And if there are title defects, how that affects the timing of closing. And then in there, it'll have a spot for you to sign it and a spot for the buyer to sign it. And that is a contract. So you're under contract if you sign that. So like if you're selling your home, if you're under contract, you can't just decide later to sell it to somebody else if they give you a higher price. So once you sign that document, you're under contract and you're obligated to sell, generally speaking, to that buyer for that price. You can get yourself into legal trouble if you sign something with one buyer and then go down, maybe a week or two passes and you get a better offer from another buyer and you say, well, I'm going to sell to them instead. And you go ahead through the process of selling to that other buyer. You could end up in a lawsuit if you're not careful. So be very careful with that. Make sure if you don't understand what you're getting into, have an attorney review that document so that you know what you're committing to. So that's an important step.
Absolutely. And to that effect, Matt, I think that's having an attorney, working with an attorney, especially if it's your first experience, can be, hugely important in this step. Because like you said, this is a contract. And from that moment of signing it, you're bound to those legal terms. And I know in my experiences with some offers you receive, if you're not 100% sure of the exact amount you own, at times they may request to do things like lock down half of the interest that you own in that area to be sure it's worth it to go through the due diligence. And so you really have to be sure what you're signing is what you want to do.
Yeah, that's a good point. That's important. And once you are under contract, generally the next step is for the buyer to perform a title search. So assuming they haven't already done this and maybe it's not part of a database they already have, they'll go through a title search. And so that what a title search is where a landman will go to the courthouse and they'll pull up the recorded deeds through time back usually to patent. So that means when the U.S. government granted the property to the first kind of private landowner. So that is an important step. So they need to make sure all through time, back until when that land was patented, that there are no gaps in that chain of title and that you actually own those minerals. And so you have what you'll hear a term, clear and marketable title. So that title search basically verifies you own the property in question.
Yeah, so with title search, that's usually when it's good to have a tip on the lineage of your family. They're going to go through and look at your history. And I think, title search is something where, depending on how many documents the company has to go through, how many acres you're selling, and how much the property is worth, there's a lot of expense spent in this part of the process and finding the information. And I'll let you kind of elaborate on that, Matt. But I know I've seen a lot of times, this is the time where the company has to determine how much money are they going to spend finding out and how much do they stand to profit from the deal that they're going to be purchasing. Yeah,
that's a good question. So, when you ask sort of how much does it cost, it really ranges, as you mentioned, depending on the size of the property, how many tracts of land you own. So if it's one continuous property in one area that has a relatively clean chain of title, so in other words, you don't have any gaps you need to remedy, that could be from a couple $1,000s, on the low end, and take 3 to 4 weeks maybe, depending on how busy a landman is with other work. So and if it's a more extensive property, or if there are any sort of title issues, that process can take several months to complete. If you own one tract, you can have a limited title search. And what that means is they'll really just focus on your property and, the branches of that tree that are related to your specific tract and your ownership. And it won't have everybody else in that section and et cetera. So it'll really focus in on your piece of that pie. And that's where it gets a lot easier for them to kind of go through it. But again, if there are big gaps in the chain of title and there's lots of issues, then it could still cost a lot of money. So
Absolutely. And we plan to really go into detail on this because it's a huge topic in and of itself, but it can be a very frustrating thing when you've gone all the way this far into the deal. You've waited the 4 weeks, 2 weeks, however long it's taken to do due diligence, and the company comes back and says, I'm sorry, we see a title defect that's kind of a showstopper. Here's what we see, and we need you to take some action with an attorney before we can proceed. And just, if you will, briefly talk on that so people know it happens, understand what's happening. And it's unfortunate because the seller doesn't have a ton of options other than to remedy that title.
So if you're an heir, you're the one that would have to go through the process of, for example, if you have a will that, or maybe even if there isn't a will, that you have to probate potentially in that county where the minerals are located to basically get clear legal conveyance of that property to you as a potential heir and a descendant of that person that perhaps is has title of record. So we talked a little bit about an example where maybe your grandfather still is owner of record of minerals, and maybe you had inherited them from your mother, but there was never a deed that was recorded to convey the minerals from your grandfather to your mother and then from your mother to you. You would have to basically go through the process of doing that. Now, how much that would cost is something that would depend on how complicated, again, going back to that title search and what they find. After the title search is done, they'll come up with a list of things that may need to be cured. So if you do have a gap in the chain of title, they'll say, hey, these are the things that need to be fixed before we can proceed to close. And if it's something that you need to do, if you have to probate a will or something like that, it's something that you would need to be responsible for, is the action of doing that in most cases. But you could potentially negotiate with the company to see if you could split the cost. So this is a negotiation point, I think, like we mentioned with the valuation process in the last episode. This is something you could talk to the buyer and just explain your situation and see if they'd be willing to share the cost if it's something that you couldn't afford to do on your own. And perhaps it's something that comes out of the proceeds of the sale. Or you could negotiate and see if they could pay for it. It'll vary on a case-by-case basis as to the size of the property that you're selling. So if you're selling, 100 net mineral acres, you have a lot more bargaining power than if you're selling 2 or 5 net mineral acres. They may say, it's not really economical for us to pay for this additional cost. We were to give you our best offer. We need to have you help pay for that out of the proceeds, in order for us to do this. And if you need the money, that's maybe potentially something you got to do. Again, it just depends on the specific situation, but this is an opportunity, I guess you could ask. It never hurts to ask, and they may say no, but you could always potentially get some help with the cost of that.
Absolutely. And just one final thought on that. They're also your best friend in giving you information, because a lot of times when that happens, it's, my goodness, where do I go now? What do I do now? And ask the buyer, what is it exactly that you need to do? So at least you have a starting point on what's next. And then, on the other hand, let's say everything goes absolutely wonderful and the buyer says, yes, we're interested. Let's make this happen. The next step is for you to sign the real deal. And if you want to talk a little bit about that and what it is and how it gets filed.
Sure. Yeah. So that is the closing process. Yep. So it's like selling your house. You go through you go to closing. You actually sign over the deed to the buyer. So you have a deed that is, or a conveyance document, depending on the type of property being conveyed. Just in general terms, that's called a conveyance document, typically a mineral deed. And that's executed, notarized, in exchange for payment. And so you hand over the deed, they hand you a check or a wire transfer, everybody's happy, they go their separate ways. Sometimes an escrow service is used. So like if you go to buy a house or sell a house, you go to a title company, they provide those escrow services. They're sort of a neutral third party in the transaction, and they help provide assurance for the buyer that they're gonna actually get a signed deed in exchange for a check. And then also as a seller, you can use that as a way to make sure that you're not just signing over the deed and then they're going to go and head for the hills and you'll never see the money. So that's something to consider. It's usually a good idea. Banks and attorneys also sometimes handle closing. It's kind of that provide escrow services. So that's the actual kind of final step in the process, and that's where the sale is completed.
Absolutely. And, and I think this is it's a great overview for selling your mineral rights, but to kind of recap for people, if a mineral right owner, if you receive an offer from a company and they're wanting to buy your mineral rights, what is the first step? What should I do? And really it is to get an evaluation from somebody or to do an evaluation yourself on how much are those mineral rights worth? Is this a good offer? Is this a fair offer? And then, step 2 is, okay, they've made a price. They've sent me an offer. What is inside of that offer? Does that offer look good? Is there any terms and conditions in that offer I don't like or that it may be questionable? And that's the point where you really go under contract.
That's right. Yeah. You make that decision, you sign that, you're under contract, and then it goes into the steps of actually doing the title search and more detailed due diligence that the buyer will do. And that'll include the preparation of those closing documents like we mentioned. And then all the way into assuming everything is good, you would go to closing, or if potentially there are some title defects that need to be cured, there may be some additional time and expense associated with clearing that up to give you marketable title to be able to sell. And that may require you recording other deeds to fill in those gaps in the chain of title, maybe probating a will. And one other thing on the probate, if you don't know what to do, they say, hey, you got to go and probate your grandfather's will. What you could do is ask for some references of reputable attorneys that can help out in that area. So if you're out of state, especially, you don't know anybody in that county, and they're active in that county, usually this is not the first time they've dealt with this issue. They have an attorney or attorneys that they work with that they could refer you to that can do this for you. So you go to closing and then that's it.
Awesome. And then last but not least, red flags to watch out for when you're selling your mineral rights. And, there are lots of things. So don't be fooled and be sure that you work with somebody who is really experienced in this when you're evaluating an offer. But here's the red flags that are most common.
The thing that you need to watch out for, and kind of we have, I guess, this 5 real important ones, and then is, if you get an offer letter that you just get out of the blue that has a purchase and sale agreement that has a price on it, and it's sort of out of the blue, it's probably a form letter that they're sending to people in that area, and it may not have any justification behind the valuation of your mineral. So they may just say, we're going to offer everybody in that area $700 per net mineral acre. If somebody happens to accept it, great. We've got it for a great price, well below market value. So if you get that, be a little bit cautious in dealing with a company, just to make sure that they're not going to try to take advantage of you. If we go back to the previous episode again, talking about the valuation process, a reputable company that's in it for the long haul is going to do their homework. So they probably already have a pretty good idea of what the values of minerals are in your area. But what you should really look for is somebody that's going to do a specific analysis of your property and come up with a number that's really relevant for your specific case, given exactly where your property is located, when they think any maybe future wells might be drilled, or if you're completely developed, what the existing production looks like and what's that worth to them. So that's the first, I guess, red flag, is to look out for any offer letters or purchase and sale agreements that already have a number on it before you've even talked to anybody, and just want you to sign it and send it to them. So that's probably the first one.
Absolutely. The next is one that's definitely strange to get a hold of, but that's bank drafts. Depositing those may be legally binding. It takes time to get it done, and I'll let you kind of speak on that, Matt.
Yeah. So again, like talking back to our example that we gave before, if a reputable company is going to treat this kind of like buying an investment house, right, a rental property. So they're going to look at doing due diligence and a formal closing where you get a certified check, a cashier's check, or a wire transfer. So that's something that you can rely on as being backed by the bank potentially. So you don't have to worry about that check bouncing. So a cashier's check would be, in the case, one way of doing that. Or like I said, a wire transfer is something that you could look for if you need kind of a quick transaction. And also if it's a large sum, that's often the way that it's handled, similar to, residential real estate closing. So that's something to look out for. Bank drafts are not favorable from a seller's point of view, because you may get that bank draft, and if you have a lot of acreage, you decide to deposit that, all of a sudden you're done. You have, generally, from what I understand, you're legally bound to then sell at that price, and it's not a check, right? So it takes time. They have to actually go back to the bank and make sure that they have funds that are going to cover that, and it's not like just depositing a check where the next day that amount's going to be available in your bank account. It may take some time. So that's an important one to watch out for.
Absolutely. Another one is, they're buying, and we touched on this a bit in the last episode, but mineral right owners have an option to sell their non-participating royalty interest rather than actually losing those mineral rights in total. And you've got to be sure that when you're selling that is what the conveyance document says, and what the contract says is the royalty rights and not the mineral rights. I think along with this, it's more uncommon now, but sometimes you'll see that they're covering all said lands in that county, not just the specific property that you were negotiating.
Yeah, and that's where it's important to make sure the legal description is very accurate on that document. And, again, this is where you would potentially want to hire an attorney to review the wording to make sure that you are selling what you think you're selling, especially if you're intending to only sell a non-participating royalty interest so that you can keep the executive rights on the minerals. Because there's a big difference between a mineral acre and a royalty acre. And we won't go into that now, but just know that that's an important thing to look out for. And I guess just in general, we'll say look out for the fine print in that conveyance document, and again, in the purchase and sale agreement.
Absolutely. Another thing, and this is always, getting a feeling for the company that you're working with is always the thing to do, and do you enjoy the process? But something you'll see is time pressures to accept the offer, and it takes time to review offers, so you really have to be careful about that and be sure that they are doing their due diligence and making sure that they're giving you time to review and consider. Yeah,
and I think that the important thing here is that they shouldn't be pressuring you. It shouldn't be the hard sell, so to speak. So if you have the landman contact you for the mineral buyer, they are going to outline what they want to do. And if they say, oh, you need to sign this today, this offer is only good until midnight, that should be a red flag to you that something's not quite right. What you would usually see is where a mineral buyer will say, here's our offer letter and purchase and sale agreement, and it is valid usually for a certain period of time, and that's perfectly acceptable, right? So they, if the price of oil were to fall, a couple of weeks from now, that will materially affect their assumptions potentially that go into the deal, and so that may affect the price that they're willing to pay at that point. So they'll usually have a week or maybe 2 weeks as sort of the deadline for when that offer is good until. And if you need to get someone to review that, and it's going to take longer to get feedback from your attorney or a contract landman that you've hired, or someone to do evaluation of your minerals, then simply ask for an extension, right? So just say, hey, I'm still reviewing this. I need another couple of weeks. Can you extend this until X number of days? And make sure you get that in writing. So this is where maybe sending an email would be a good idea versus getting a verbal on a phone call. So it's usually, as long as you have it in writing, you're going to be covered by that. So
absolutely. No, and that makes sense. And a lot of times too, especially with the deal time period, that even when you go outside of that, at times the deal can still complete. It's just that your duty to be sure that you don't offer the property to other people is up in that time period. The last thing would be signing away payments that you don't might realize that might be in suspense, or HA payments when you don't realize that you have them. And this would be more common with properties that come up that people go, oh, I didn't realize that this was here, or they inherited it, and the person that used to own it didn't realize that it was there, because these funds can be held in suspense.
Yeah, that's exactly right. So this is where you would want somebody that's going to be upfront in dealing with you and say that, as part of the deal, there's some escheated funds that are held with the state, and that escheated term, that just means that the monies that were owed to, perhaps your ancestors, they were handed over, because they couldn't have been contacted. Maybe they passed away and they, didn't leave any sort of a will or any, nothing went through probate. And so that just sort of sat there, and those checks started getting sent back after they couldn't get a hold of that person anymore. And so they'll hand that money over to the state. And you can do a search, like we mentioned in the previous episode, with the state where the minerals are located, and or there's often, if you're in the state that the person lived as well, that's there could be funds in both of those places just from various sources. Those are always a good thing to check. So if you do end up inheriting some property that you knew nothing about, that's a good step to do. That's something you can do on your own, or you can get help with that if you don't really know where to start. We'll have some links in the show notes again that tell you how to look that up. But it's you can just search for escheated funds and then the state name. Usually it'll link you to that. Google will send you the website for that state that you're interested in. The other scenario is, like Justin mentioned, if you're inheriting minerals that you really didn't know anything about, there may be funds in suspense with the operator, with the oil and gas company. And this is something that you potentially would be owed, but if you aren't reading the fine print in that conveyance document, you could unintentionally sign that over to the buyer as part of the deal. And so that's something, if you are aware of that, or just be aware that maybe that's something you should check with. If you have producing well on the property, and this is something that you want to contact the operator in question, they usually have an owner relations department. Just a quick call to them and say, hey, here's the legal description. I inherited this property. I wanted to check to see if you have any funds in suspense. Here's the name of my grandfather or relative that I inherited this from. And they can look that up pretty quickly and give you an answer. And so those are two things that really need to look at, especially if you're getting something where there's a producing property. Make sure that you're not signing away any additional payments or funds that you don't realize are there, because that could be something that is owed to you.
Absolutely. Well, and I think that about wraps it up, Matt. I think we've given a good overview of selling your mineral rights and what that process looks like.
Yeah, so that's kind of I guess one disclaimer here. That's the typical process. Your mileage may vary. Some buyers have slightly different process, but those are the general steps that most buyers will go through. And so that just gives you an idea of what to expect if you do decide to sell. Again, the caveat that this isn't an advertisement to sell them to us. We are I guess wanting to inform people, because usually the best scenario, if you don't need the money today, is to hold on to those. You're going to have higher upside potentially. Again, there's risk with that, so we aren't financial advisors. So if you really have specific questions about those, contact your financial advisor and your attorney or accountant, and they can help guide you in the process and help you decide whether or not it makes sense to sell in your case. But that is something to consider.
And, this is something, too, that it's a legacy thing. If you don't need the money at this time, this will be something that's passed through your heirs and down the line. So remember that and keep that in mind in the back of your head.
Yeah, exactly. And to that point, we're going to cover estate planning here in a future episode, and we're going to feature an attorney that is familiar with estate planning issues, and specifically the scenario where maybe you inherit property in another state, and then what to do in that case. So, that's a pretty common situation. So that's something we're going to cover in a future episode. And then The other thing too is around, we talked a little bit today about selling and, when you run into title defects and curative measures. So we're going to cover that in a future episode as well. So what are some specific title defects that you might run into, how you have to cure them in most cases. And again, it may vary by state, but we'll talk about in general terms. So that'll give you a little more information as if you do run into that, what are your options and who you need to contact to help clear that up. Thanks again for listening, and we will catch you at the next episode of the Mineral Rights Podcast. And if this information has been helpful to you, please leave an honest review on iTunes. We read every one, and we greatly appreciate it. And leaving a review and a rating will help make sure that we reach more people like yourselves and like us that are fellow mineral rights owners and that maybe need this information. So thanks again. Thanks, Justin.
Thank you. And also, too, there's going to be a blog post below this, and there'll be a comment section below that. If you have a question, leave a comment there. We will be answering those each show and trying to go back and be sure that we answer as many questions that people have as possible.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.